Hey YouTube, it's Tracy from Entrepreneur Girl. In today's video, we are going to be talking about stock trading. So this is going to be the first stock trading video in a very long series discussing stock trading. And if you know my history, you probably do, but basically I graduated from UF Business School. The very first thing I did was dabble in the stock market before I started adding eBay and Amazon and all of the other ventures that we've discussed in the past. And so I really love stock trading, but I kind of got distracted out of it because I started with the whole e-commerce thing, and I get a lot of questions about it. I'd really like to dive into it again, relearn some of the strategies that I had learned in the past, and I thought, what is a better way than to take you along with me, just a normal person, learning it, showing you examples, teaching you everything that I've researched, and just kind of walk alongside each other as we journey the stock market. So disclaimer, I'm not a financial advisor, I'm not an attorney, I'm not, a stock trader by trade. So this is just Tracy using this as another method of investing, another method of making a return, another piece of the pie where I can stay at home and have an income working from my computer. So we are going to be talking about four things today. The first thing we're going to be talking about is the risk versus the expected return that you have from any job. Whether it's a brick and mortar job or you're working from home, it doesn't matter. The second thing is we're going to be comparing some of the options of staying at home and the risk and benefits of those. Then we're going to get specifically into stocks with our third thing, and that is going to be covering the basic vocabulary that you're going to need to progress into future videos. And then the last thing is the takeaway, what you can do kind of as your homework, kind of to get your feet wet, kind of to get going in the stock market. Everything has risk. Risk versus expected return is not only in e-commerce, it's also in any brick and mortar job that you might have. For example, if you're investing time at your job, the expected return is a paycheck, right? And if you're investing money into a product with e-commerce, the expected return is to make more money. In our lives, balancing this risk and return, the option that we could choose is going to have risk. So a lot of times, us that stay at home, we kind of think, we miss the security of a brick and mortar job, and we kind of forget that there's risk involved with that too. And just recently, we saw this with the recession. So many people lost their jobs, lost their everything, all of their financial security. But it doesn't take a recession. You can walk into a building and be told, here's your severance pay and it's time for you to go. Because anytime that you're investing in something that you don't control, there's a risk there. So if I don't control that company, I don't control that building, I don't control that boss or my coworkers, I don't control any of it. And so there's a lot of risk as to what can happen to me. There's also a risk with staying at home and being an entrepreneur and being your own boss. There's the risk of failure. We worry about the financial risk that we're taking. We worry if we're picking the right product to private label. There's all kinds of risk associated with that too. So now that we know and we're overwhelmed that there's risk with everything, there's also something called opportunity cost. Basically, every decision that you make has a repercussion, right? So if I choose job security, and I go and I get a job, then I'm not getting to stay home with my kids, take care of an aging parent, be home with my newborn, or for me, homeschooling my kids. That's an opportunity cost to going and getting a job. When you don't make a decision, you're actually still making a decision, right? So every decision, every non-decision has an opportunity cost. So whether you stay at home, you have an opportunity cost of that job security or maybe health, insurance coverage. If you choose to work, then you have lifestyle types of opportunity costs. You can't just go and take a vacation whenever you want, or, work in the middle of the night or whenever you feel like it. If you're tired, take a nap. There's all sorts of opportunity costs in our lives. So we are forever balancing, risk versus benefit and opportunity costs in all of these decisions we make, but especially in our business decisions. Why am I telling you this? Okay, well, the reason I'm telling you this is because when we're gauging in our brain about the risk versus the opportunity, we are always looking at the opportunity. What can I get? What's the chance that I'm going to get this? How much can I get? And then we kind of see if we're willing to take the risk that will get us, that prize. And so when I was researching fresh out of college and I was looking at all the different ways to make an income from staying at home, I actually went to the bank. I actually talked to the representative about, the different options that a bank has. Talking to her about the savings account interest rate. I was talking to her about bank CDs. I was getting all the brochures on all the different returns that I would have if I invested with the bank. And I was like, seriously? Because most of it is like 1 to 3%. Get an exceptional CD, it might be 7%. And then if you go to the government, and you're looking at bonds, I branched out a little further and I'm looking at mutual funds. I'm looking at safe stocks. Then I started getting more and more aggressive. Regular stocks, there's short selling, volatile IT stocks, day trading, and I was looking at all the different returns that I can get from investing the same dollars. I just went with regular stock trading, and this is why. Now, historically speaking, if you look at the stock market, even though it does this and it has all these dips, like even in a recession, over time it does trend upward. Okay, so here is a bell curve, and I'm going to kind of use it to explain our expected return for the stock market. Now this is the average part here. This is 35% on this side, and this is 35% on this side, and this is where most of the average returns happen. And according to Bloomberg, and I'm looking at numbers from 2014, 2015, the return is about 7 to 10%. Wow, this is really hard to draw like this. Okay, 7 to 10% on average. Now, that doesn't sound like a lot, especially considering, when we were talking about, really awesome CDs might get us 7% or bonds might give us 5%. But what is so attractive is there are a lot of people down here that are making, 15% return on their money, which is considered like really awesome, right? But all of us in our heads, we're thinking about these people because this seems scary to us. We know that there's people down here, say maybe only making 3% on the stock market. And so we think, oh, well, it would be safer for us to do something with our bank because banks seem really safe and they're right down the street and we can physically walk in them. So this is the bell curve, and this is what every business has. Okay, so now we're going to talk about diversification, and you've heard me talk about this before because I believe in not having all of my eggs in one basket. And I know there's some of you that are listening that totally disagree with me, and that's fine. I know that you think that, you become a master of nothing and instead of a master of one thing. And I see your valid points to that. But as for me and my beliefs, I don't want to have all of my income around any one thing. So for example, in e-commerce, if I put all of my products into Amazon and then Amazon closes my account, I have zero income. My income is completely stopped for at least minimally until I work it out with Amazon, if I work it out with Amazon. So I like to have Amazon and Etsy and eBay, and even then, I still like to have like my own website. I can sell goods, through my own channel that I control, or, even, we talk about some higher things is getting into retail stores with your own private label product. So these are all ways to diversify just e-commerce. Then we start to see the whole pie filled out more, and you can kind of see it better. Then what it looks like at the end of the day is that, I have a monthly income of, 10,000, say, just for example purposes. And if I have some security, because I know that if any one of these elements, if my website crashes or my eBay account gets closed down, or I lose on that, commodity stock I just invested in, or if my private label product is a flop, I'm not so stressed out. I'm not so concerned because it's like, I learn from it. I have to adapt. I have to change. I know it's not going to be 100% success rate on all of my business ventures. So it's just kind of to be expected. I can kind of handle it better, and my monthly income still continues. So this is what I believe in. I don't add a pie until I'm feeling pretty confident about it. I didn't add Amazon until I felt confident with eBay. I didn't add my website until I was confident with Amazon. So I'm not saying go out there and just start 20 new learning curves and, throw a bunch of stuff at the wall and see what sticks. I'm not saying that. I'm saying take, a methodical, educated approach to creating a monthly income. In stock trading, it's exactly the same way. It's taking your risk and diversifying it over several different pieces of the pie so that if any one piece takes a hit, you still can float yourself on the other remaining pieces. An example of that is, say I have commodity stocks and tech stocks and transportation stocks, and the transportation stocks take a hit, and they're really going in this downward spiral. Maybe my tech stocks are hitting it really well. And so you can study the nature of stocks. You can see that while some will go down, there's others that are like the mirror image. Like when this goes down, this goes up. And so this is kind of what you're trying to do, is balance that. So when we were talking about, in our lives, we're balancing this risk versus this expected return. We do that in our life. We do it in the stock market. We do it in e-commerce. We do it all across the board. And I just wanted to show you, kind of what I was talking about. Okay, so here on Entrepreneur Girl, with our build business, love your life, balance both, the whole premise is that we want to have this amazing life. We want to have time to spend with our family. We want to have time to travel. We want to take all the things that make us individuals, all the things that really speak to us as people, and we want to have time, we want to have freedom, and we want to have the money to do all of that. But in order to do that, we have to have the freedom, which is from online, and we have to have the money, the source of income coming in that affords us that type of lifestyle that we desperately want. And then the third element of that is balance, right? We have kids, we have a house, we have a business, we have this travel desires, we have all of this stuff in our life, and how do we balance everything to make everything happy and flow? So those are the three elements that we talk about at Entrepreneur Girl. We've been really heavily focused in this e-commerce pie, which is wonderful. We do that every Tuesday. But on Thursday now, we're starting to branch out with weekly videos that talk about all the other parts. So these are just, examples of ways that you can fill up your own pie. Yours would look different than mine based on your interest and your skill set. But this is just to kind of get you to understand what I'm doing here on this Entrepreneur Girl site, and also to get you to understand how I'm thinking as far as diversification. This is what I was not only trained in, but this is how I personally see it. And this is how the stock market, which is what we're talking about today, flows. Okay, so now we're getting into kind of the boring vocabulary part of the video, but it's much needed, so I'm just going to try to make it fast and simple and just easy to understand. Most of these terms you've heard of, I'm sure, but we're just going to kind of run through them and give like an easy definition to this. So market cap, that's the number of shares that's available to the public, and it's multiplied times the price of a single share. So market cap is kind of just as it implies, right? It's the cap of the market. Blue chips. Now this is the name given to the 30 stocks that make up the Dow Jones, and it's from the poker game in which the blue chips have the greatest value. It used to be said, like if you had the bluest blue chip company, then that would be the highest valued stock. Okay, spread. Spread is really important because that's the price difference between the lowest buy price and the highest sell price. So this is kind of where you're gauging your opportunity, right? You want to be able to buy it at the lowest price and sell it at the highest price you can, and you're trying to gauge this spread to determine the opportunity. Indexes. Now, indexes, your eyes kind of glaze over, so we're going to go through these really rapidly, but a lot of your focus will be on these. These are benchmarks that the financial market uses, so it's important to know what they are. And the main ones are the Dow Jones Industrial Average. That's referred to as the DJIA or the Dow, and it's the most quoted index out there. And they focus on the blue chips, which are the 30 giant companies of the American industry. Think Microsoft, think GE, and they are a price-weighted index where the higher price stocks, receive a higher value. Okay, now we have the New York Stock Exchange Composite Index, the NYSE, and this is a market or a price-weighted index. Then we have the Standard & Poor's 500 Index, the SPX, or I always hear it called S&P 500. Some people call it the broader market. And this is where companies listed have a market cap greater than $4 billion. This is said to be the benchmark of the U.S. economy, this index. So people watch it pretty closely. All right, now we have the NASDAQ 100 Index, and this is 100 of the largest domestic and international non-financial companies. We have the NASDAQ Composite Index, and this is the statistical measure of all the NASDAQ, the common stocks that incorporate into that, and it really indicates maybe changes that are occurring within the market itself. The Russell 2000 Index, it represents the small cap stock index that many believe either lead us in or lead us out of the bear markets. Bear markets, what the heck am I talking about? So that's next. We're going to talk about bulls, bears, sheeps, and hogs. Huh? So it's real easy, it's kind of fun, but bulls are very optimistic. They're the ones that are always telling you, oh, the market will come back, the market will come back, and they make their money on the uptrends. Then you have the opposite extreme. You have the bears, and they're very pessimistic. And they're always telling you, oh, the market's getting ready to turn for the worse. It's getting ready to get really ugly. And they make money on the falls. Think of the bears as the person that will sell you a stock for $10, believing that the market is going to go down, and then rebuy it from you for $5 a share, say. So they're really big into shorts. Okay, then you have the sheeps. Sheeps are people that really just follow anyone's advice. They buy, any hot tip that they hear. They don't really make money because they're just kind of, following everybody's advice. They're not really putting any kind of, rational, educated thought processes into making their own decisions, which of course you have to do. You shouldn't listen to me. You shouldn't listen to anybody else. Okay, then we have the hogs. Hogs are the greedy people. They bet all of their money on something really risky. Like, I'm just going to bet my whole house that this is the next best thing. This is the sure thing. This is going to make me a millionaire. And they don't make any money either because of those, which leads us into emotions. So, the greedy hogs, greed is an emotion. And there are two emotions that you should never trade on, but we all feel, so we need to talk about them, and that is greed and fear. Now, greed, what happens here is when you're trading on the emotion of greed, you will chase stocks or you buy into the latest craze. So even though you should sell because you've made a good profit, you've made a good return, and you're thinking, I should sell, your mind says, oh, but you might make more money if you just hold on. And so you end up chasing it or holding on to something way longer than you should have, and you actually lose money. And the opposite of that is fear, and that's where you sell too fast. You're so scared of getting burned that you sell too fast, and you leave a lot of money on the table. And in mass, if everybody is kind of driven by this fear, it will drive the whole market prices down. And you'll see that. You'll see examples of that on CNBC if you start watching that, which I suggest you do, because you just kind of get familiar with the terminology that we're talking about today. You kind of get familiar with world events, and world events or any kind of emotion will steer the market. You see it all the time. So, oh no, something's happening in Europe, so then people get fearful and they start to sell everything. So you just kind of see examples of this literally almost on like a daily basis just by watching the news. Now, greed and fear are precursors to supply, misspelled, let me fix that. Supply and demand. And supply and demand are anything from like gum to massive life-saving equipment in the hospital. You know, supply and demand runs the show 24 hours a day, 7 days a week. And basically all it is we want what we can't have, right? So if there's limited supply, then there's a really high demand. And if there's a high supply, then there's limited demand. And you can kind of think of an example would be water. We have a high supply of water, at least right now, or at least the perceived is that we have water. We get it for free. We go to a restaurant, we ask for a glass of water, they give it to us for free. So we don't have a lot of demand for it. You know, I'm not willing to spend some ridiculous amount of money for water because I get it for free. That's the demand, free, right? Because I have this high supply. But say I had a limited supply. See, I had the very last water bottle in the world. Well, then how much is it worth now, right? I mean, who would not be willing to just spend, you know, millions of dollars or all of their dollars on my water bottle because it's the only one? So now we have a limited supply and a very high demand. And so that's how that vocabulary works. See, that wasn't so bad. Okay, so now what can you do to get started? What's the takeaway from this video? Well, the first thing that you can do is read books. Read everything that you can get your hands on. Not necessarily this book. This is just something I popped up. This is the book that I read many years ago when I was starting stock trading. But you want to make sure that you're reading current news, right? So look and see when the book was published. Make sure, you know, it's within, you know, the last year or two so that you're getting new current information. But this is one, but read lots. Just read anything that you can get your hands on, not only with books, but, you know, Google stock trading, see what comes up, click all the different websites, all the different articles, get educated. All right, number 2, sign up for an account. Now, my account is with Charles Schwab, but I started that many years ago. So there's lots out there now, like E-Trade and all kinds. But what I really wanted to talk to you about on these accounts is that you can stock trade all from your computer. Your account is normally given to a broker that's assigned to you. So if you did have questions, you could, you know, contact your broker. But for the most part, you can do everything right from your computer. And what's really cool is that all of these places now offer, you know, trading tools that they give you for free. And what I really like is this education to learning centers. And you can learn how to stock trade, you know, by listening to these seminars or, you know, applying yourself into this educational portal that most of these trading places have. They have communities that you can become a part of. They have workshops, and you can even find groups out there. I don't know about this group. It's just one that I Googled, so I'm not affiliated with it. I can't vouch for it. But there's many, many, many groups out there that you can kind of play trade. You know, you can trade for free using pretend money to kind of learn, you know, and the winner is the person that ends up with the most, you know, pretend money. But it's a good way to kind of get your feet wet without taking any kind of risk or loss. And it's kind of fun, and you meet a lot of neat people. So I'm not sure what this one is. I just kind of popped it up here that there are courses and leagues and videos, and there's just all kinds of groups that you can kind of, you know, play around with. Okay, number 4 is just taking the plunge. Like I said, I have a Schwab account, and just go ahead and start your account, take the plunge. There's no real learning like using your own cash. So even if it's a minimal investment in a safe stock, it will get you moving. It will get the momentum. It'll get you confidence. It'll get you going in the right direction. And the last one, number 5, of course, is just to stay here, watch my videos. I'm going to try to keep it as real and simple and give you examples of what I'm doing. Now, again, disclaimer, I'm not a professional. I'm just a regular person, just like you, that's going through this process, gone through it before. I want to get back heavy into it again. And I'm just going to kind of take you along for the ride and show you what I learned alone. I'm sure I'm not the only one. You know, there are other videos on YouTube that you can partake in. So those are your 5 action steps for right now. Well, guys, that's it. I hope it was helpful to you. I hope you enjoy diving into this other financial area with me, another piece of our, online portfolio pie, so that we can be making money not only from e-commerce, but also stock trading and real estate and websites and all of the things that I hope to cover on this Entrepreneur Girl YouTube channel. Because after all, we are talking about building business, loving your life, and balancing both. Talk to you next Tuesday. Bye, guys.